Welcome to The Real Deal. And look, whether you're like me as a trader who happens to like the game of poker, or whether you're like any other trader that just observes what happens throughout the day, you're going to realize the importance of switching gears. As traders, in life in general, you have to work within the context of the environment that you're in. So when you're trading, that means things can be different at 9 o'clock till 10 o'clock. And in the middle of the day, they can make a shift. And then at the end of the day, in power hour, you can then make another shift. And it's incumbent as a trader that you have the ability to shift gears to the market that you're in. Now, this can work in a lot of ways. We day trade here, obviously, at Real Trading. And what we do here on the show, Trader TV Live, every day is going to be day trading. But imagine a scenario where you're a swing trader. Swing traders should observe the environment they're in. A swing trader should have setups for bull markets, and when stocks are doing this, you're in a bull market. I'm showing ARM because it's a really extreme example. But you know, when you're in an upward trend, you might have strategies for a bull market. You might flip those when it's a bear market. When things are going sideways, you might have a set of strategies for that as well. Now, when you're day trading, this gets a little bit more simple, I like to think, because you usually parse things out from separate day times. Now, times of the day. We always talk about the opening rush, the opening range, and generally speaking, that can be 9:30 when the market opens here Eastern time in the US to 10 o'clock. That first half an hour of trading. Now, I tend to think it's not a hard and fast rule when that opening rush is. Sometimes things slow down at 10:25. Sometimes they slow down at 10 o'clock, 9:45, 10:15. It's just about that first set of moves and your expectations out of it. You are always going to get one of the biggest volume candles of the day in that open. So what are you looking to capture at the open? You're looking to get the big explosive move. This is the one 15-minute or a series of 3-minute candles that'll only be a couple of data points that can be the entirety of a day's range. So the manner in which you should be trading there should be to try to hold on for the bigger move and look for that explosive upside. It's not really a scalper's market in that first 5 minutes, 10 minutes, 15 minutes, 20 minutes. Because if you try to scalp inside of ranges like this, and one day it's completely insane, and even the next day when I zoom in, scalpers are not going to do particularly well in that type of an early move. But if you're trying to catch a bottom, if you're in a short holding it, you can get that explosive opportunity. Now, this plays in both ways here. If you try to capture, and I'm going to zoom back out so you can see yesterday, if you try to capture the size of moves that'll happen at it open, looking at what's going on, what happened with ARM, if you try to capture that in the afternoon, yes, it retraces a fraction of what it might have been. If you try to catch a breakout buy of dips or a breakout trade, you're going to get a fraction of that explosive trade. And if you're sitting there hoping for 10, 20, 30% like it did in the first 30 minutes, you will just be there in a trade that never gets profit. Let's say you buy a perfect dip at noon, and it goes $4 in the money, which is a great trade on a $100 stock. But you're expecting it to go 30 bucks like it did before. Well, suddenly when it stops you out here, you've done nothing but hold a trade for 2 hours that gave you an ample opportunity, not just to get in and out for profit, but get in and out multiple times. So once you've decided, okay, I know that there are different times of day and different places where I want to have these gears that I'm going to set up in. Morning trades, more explosive, hold on to them longer, don't scalp trade. Middle of the day, play off support and resistance, a little bit tighter stops. Try to play maybe directional trades, favor the long if you're buying dips, or play into heavy resistance and short off tops, but make sure you're taking profits in the scalp mode. And then maybe at the end of the day, you're doing a little bit of the same or holding a trend trade into power hour. Once you've divvied it up, you've got to remember the most important thing when being a trader and trying to get better, and that is to catalog your successes and your failures. If at the end of the day, all you do on a stock like ARM, or maybe you want to trade the futures and you're trading the Qs, and all you ever do is say, I'm up or down on this stock, how did I do? That's my P&L, or grade every trade exactly the same. I made 10 trades on it. This one had this win, this one had that win. You can't do that. You've got to then divide, okay, these are my opening trades. These are my breakout trades. This was my lunchtime trading. Put those in the same group, because what might happen, and I'm telling you because I know several successful traders who had this problem, is we make a bunch of money in the first 30, 40 minutes. And they were consistently profitable on breakout trades, buying dips and holding all day, all morning range long. They made great money doing it. But then in the middle of the day, they would just lose trying to capture bigger moves and not scalping very well. But at the end of the day, they'd just be up on the stock they traded. So what would end up happening in that scenario is they catch the explosive move, say on the Qs here, they buy dips, they hold for the high, all that good stuff. Then they try the same stuff when it's going sideways, get no big moves, get chopped around, end up taking a couple of hits while trying to hold a big win and bagging no profit. But because they only lost 25% of their day, they just see themselves as up on the day. Look, I made money on the Qs. But that's not how you're going to get better. What you have to then do is parse those trades out in your journal or your spreadsheet, however you want to do it, and ensure that you know which ones are actually profitable for you, so that maybe you put less risk into the open trades if you're a better scalper in the midday. Maybe you put more risk into power hour trades because you figured out that, hey, you know what? I have a win rate of 55% taking breakouts at the open, but when I take trend trades in power hour, I'm winning 75% of the time. My R&R is suggesting I should be doing more of that. And that's what growing as a trader is going to be. So it's one thing to observe when you can do different styles of trading and switching gears. It's another thing to grade your performance in those different styles, and then you can start to risk allocate differently as well. So I kind of hope that makes sense to everybody. You don't just trade one stock and say, hey, I was good on the Qs today, I was great on Apple today. You've got to be able to look at the different types of trades you make. Breakout in the morning is not the same as a breakout at lunchtime. A buy the dip is not the same at 9:30 as it's going to be at 3:30 when there's not as much time left in the market for it to be able to rally. And once you recognize that, you can start to grade yourself better, you can start to allocate risk better, and you can become a better trader. That's the real deal. And I can't say it enough. If you're not keeping track of your trades, then you're not trying to get better. Good luck, everybody.